Your QuickBooks says you have $42,000 in the bank, but your actual bank account says you have $31,000. So, where did the other $11,000 go? This is exactly why reconciliation matters. And when your bookkeeper says your accounts are reconciled, that doesn't just mean, yep, everything looks good. It means something very specific. Hi, I'm Beth with XactBalance Financial. Today, I want to explain what reconciled actually means, because it's one of the most important parts of keeping accurate books. At the end of every month, your bank gives you a statement showing what actually happened in your account. Deposits, checks, debit card purchases, transfers, bank fees, payments. Then we compare that statement to what's recorded in QuickBooks. We're asking, does what QuickBooks says happened match what the bank says actually happened? And we don't want it to be pretty close. We want to be able to account for every difference. Let's say QuickBooks shows $25,000 in your account. Your bank also shows $25,000. You might think, perfect, everything matches. Not necessarily. You could have a $2,000 expense missing from QuickBooks and a $2,000 deposit missing. The balance still matches, but now your income is wrong. Your expenses are wrong, and your profit is wrong. That's why reconciliation isn't just looking at the ending balance. We're verifying the transactions behind that number. Let's say you pay a vendor $5,000. The payment is already recorded in QuickBooks. Then the transaction downloads through the bank feed. Instead of matching it to the existing payment, someone clicks Add. Now the business spent $5,000, but QuickBooks says you spent $10,000. Your expenses are overstated, your profit is understated. And unless someone catches it, that mistake can sit there for months. This is also why connecting your bank account to QuickBooks does not mean your bookkeeping is done. Bank feeds are a tool, they aren't bookkeeping. Reconciliation can uncover duplicate transactions, missing expenses, or missing deposits, incorrect transfers, bank fees that weren't recorded, or checks entered for the wrong amount, or even transactions sitting in the wrong account. And your credit cards should be reconciled too. If your credit card statement says you owe $12,400, I want your books to support that $12,400 balance. If they don't, we need to figure out why. Here's the bigger reason this matters. QuickBooks will still generate a beautiful profit and loss statement even when things are wrong. It doesn't put a giant warning across the top saying, don't trust these numbers. It simply gives you the report. And then you might use that report to decide, can I hire someone? Can I buy equipment? Can I take an owner distribution? Am I charging enough? How profitable was I this month? How much should I set aside for taxes? Those are real business decisions. And I don't want you making them based on numbers we can't trust. So if you're paying someone to handle your bookkeeping, here's one simple question you can ask. Are all of my bank and credit card accounts reconciled through the most recent statement? Because there's a big difference between everything has been entered and everything has been reconciled. Entering transactions gets information into your books. Reconciliation helps us verify that information is actually accurate. And ultimately, that's what good bookkeeping should give you. Numbers you can trust enough to run your business with. Know your numbers, know your business. That's the Zac difference in financial management.